Hello everybody, welcome back to the channel. Today I'm doing my top 3 option plays for the week. And for those of you new to the channel, what you should know about me is I love selling premium. So I look for 30 to 45 days out typically and just let theta eat away at that option. So basically I'm trying to sell worthless stuff to some other person who's trying to buy a lottery ticket. So first off, we got CHEWY up in the house. And if we look at the chart here, you can see that the RSI level over here is pretty low. So it looks like it might be oversold. We're near some decent lows right now. The price is sitting at 62.50. Going back over a year, you can hit 55, and there should be like a support line about here. A lot of the action happens above where it's currently at. We're below some of these moving averages. Like, to me, this screams time to go bullish on this position. And even then, worst case scenario, if we sell a put on this position and we pick up 100 shares at like 55 or 60, I think this is a stock I would not mind holding. Collect a little dividend along the way while we sell some covered calls, because I think this will be a nice bullish position here anyway. Anyway, so going here, just looking at the action for like the 1 year, I'd want to be around the 55s. I think we got some long-term support there, especially since we're already testing the 60 support. Let's go ahead and bring this down to a smaller time frame. And we are trending down. RSI is going kind of crazy, but still it looks oversold. And again, from this chart alone, you'd want to be around 60, but like I said before, I want to go back to like the 1 year out, the 55 level support. So I'll be looking at selling a put around 55. If I get a sign around 55, that's awesome, because I'll hold those shares and sell some covered calls on it. If I go to the Analyze tab here, I like to go 33, 40 days out or so. That's what I'm going to be looking at. 40 days out, the 55, you can sell this for about 116 bucks. And if you do the quick math here, that's at least a 2% return on risk, because 55 times 2 is 110, so there's your 2% over 40 days. Like, that's pretty cool. Let's go ahead and just put that in so you can see what the P&L looks like real quick by going to the risk profile. And as you can see, as long as it stays above 55, we get max credit. This blue number over here is the max credit. This would be $114 if that was the fill price. And our break even be 54. So worst case scenario, we can put these shares, and it's like we bought them at $54, even though right now it's trading at 62. So that's gonna be the first play I'm looking at, would be CHEWY at 55, about 40 days out, collect like $1.20 or so in premium. This is actually a play that I put on Friday. I'm a little bit more bullish on CHEWY than I just said right here in this video. So if we look at my current positions, I actually do have a CHEWY put 46 days out, so a week further out, that actually sold closer to the money, because I really am fine holding these shares. So I thought the premium I was picking up for this position would be okay, because then I'd be assigned to 59. So what I actually just said to begin with is actually a little safer than I actually went, because I know people are going to paratrade. I hope you don't paratrade. Use my videos to help you generate ideas. Like, don't just follow someone blindly. I always say that. I'm not a financial advisor. But I think this is a pretty good play that you can make a little 2% return on. Next up, this actually be an aggressive play. And it might not present itself, but you know me and Netflix. It's one of my favorite stocks that I love trading on. I seem to always be right when it comes to Netflix, which is pretty cool. I know eventually I'm going to be wrong, because, that just happens over time. Netflix, let's go ahead and switch this to let's go 1 year, 1 day. So as you can see, Netflix is kind of breaking out right now. It's going up. It's above all these moving averages. Possible support would be at these levels that are drawing that used to be resistances at 560. And so we're trading like almost 80 bucks higher than that currently. It looks like we hit a resistance in this area as well. Like, it's been bouncing off 646 for a little bit. Let's go zoom back out real quick. We do have earnings coming up, which I tend to want to sit out of earnings, but with Netflix, I just feel like the premium is up there that it might be worth playing. So what I'll be looking for is Netflix to have like an update on either Monday or Tuesday possibly. And if it gets back up to like 640, then you might be looking at me selling a bear call about the 650 to 660 range again. You saw me put that in my video last week. I'm willing to play that again if Netflix goes up and presents a nice premium for that play. So actually what I'll be doing with Netflix is I'm going to create an alert. I'm going to right click on here. create alert. Netflix stock is at or above. I'm going to just say 638, so I have time to actually react to it. And it's going to send me a notification if Netflix goes above that, so I know I can get ready to settle this position if it does go up. And I can make a note, Netflix be flying. So, I'm going to create this. And then if Netflix does go up, I'll get a notification on my phone, because I have the app on my phone. If I'm sitting at my desk, it'll make a sound, so I know, oh, let's go to Netflix and see if that bear call play is on there. And this is because I'm bearish on Netflix in the short term. I just think it's a little overpriced here. RSI is up. We're above our moving averages. And we have earnings coming up. I feel like if you have the capital to put on like an iron condor, it could be a good move. Because I just think after earnings here, like that IV is going to get crushed so hard. Now, I think Netflix does have the potential to really drop down, so I'm hesitant to sell the put side, but the call side here and make it a spread so that you limit your loss at the top, that's kind of what I'm thinking with Netflix. We'll see if that presents itself next week. If it does, great. If it doesn't, then oh well, we didn't lose money. So that's kind of the way I look at that one. The next play I'm going to be looking at is actually going to be Rocket. And Rocket is actually a position I actually have, I think, 10 contracts on already. Because I just think it's an awesome value right now. If we want to go to like some Yahoo Finance over here, so Rocket, the market cap is 30 billion, and the revenue is 16 billion. So market cap is about 2 times the revenue of 2020. And if you look at some other mortgage companies, it's more like a 4-to-1 ratio. So here we're say 4 billion, and they only made 1 billion, so 4-to-1 ratio there. We got Meta, same thing, 1.8 billion, revenue 450, again 4-to-1. So why is Rocket, which seems like the most sound of all these companies, the one that's actually the cheapest, in terms of ratio to, or revenue ratio to market cap? So that's why I'm fine with Rocket. Rocket's one that I don't mind holding because I think it's going to go up. Everyone's going to need mortgages anyway, whether or not the housing goes down or up. Like, people are going to be getting loans. They need a place to live. And Rocket is near, actually, I think it might be all-time lows right now in terms of like the 2-year even. Let's take a look at that real quick. Yeah, if we're at a 2-year low, like that's an awesome point to be at. And on top of that, RSI is pretty low, so it's oversold. I just see a lot of bullish indicators on here. And long term, I'm bullish on Rocket anyway. So let's go ahead and let's just say we go $1 under where the current price is because we don't want to get assigned. And see what that premium looks like right now. I have not looked at this yet, so let's take a look. And let's go ahead and go 33 days out. We don't have earnings coming up, do we? Earnings 11.9. Okay. Well then, we'll go to 11.5. Put 14. Look at that. The 14 put. You can get this filled for 28. That's again 2% credit or 2% return on risk for a 26-day hold. Because if you collect $28, divide that by 1,400, that's going to be 2%. Like, that's pretty good. I'll sell a couple contracts on Rocket. Well, I won't because I already have positions on Rocket. And when I look at this here, I have some 16 puts that expire this coming week. And right now my plan would be to take assignment on those because I think I can sell some covered calls on it. But I may roll these out. We'll find out. I do have 10 contracts there. And then I already have some November 19th, 15 puts. That is through earnings, so that's why I slip up on my end, truth be told. But again, Rocket's one I don't mind loading up the portfolio in. I'll take all these shares if need be. So I'm bullish on Rocket. So there you go. All right, if you guys saw, like, all these stocks, all these support and resistance lines and trend lines have been graphed automatically. If you want to learn how to do that in Ameritrade, go ahead and watch this video here. And good luck next week, guys.